Hey guys, what's up? Alec back with the daily stock market, and look at that, our main public account now up to $92,571, up $37,000 just in the past 12 months, and year to date it's up 33,000, pretty much in line because we're nearing the end of the year. So it's an exciting time for the stock market, but it's also an exciting time for the cryptocurrency market. The public account for cryptocurrency is now up to $22,177, up $7,000 just in the past month. Bitcoin now at $96,000 per coin. However, we won't talk about cryptocurrency in this video because I have a whole Instagram and YouTube dedicated to just cryptocurrency, the daily cryptocurrency here on Instagram, 113,000 followers. Feel free to follow along there. I post reels all the time, and on YouTube I just posted a full-length video on the 3 best cryptos to buy in 2024. You can see here, just posted 5 days ago. In this video, we're going to be talking all about Chinese stocks like BABA, for example, at $86 per share, if it's a good time to be buying or if there's still a lot of risk involved. In the last 5 years, BABA was at $309 per share, and it's just been a downward trend till 2020, and now it's finally consolidating at that bottom of around $75 per share for BABA. We're also going to be talking about some of my favorite long-term stocks to be buying and holding on to for the next 24 months, just as like a money park, a safe bet in the stock market. Something like Nike at only $78 per share. Now, they are up 5% in the last week. They were closer to $72 per share, but anywhere under $80 per share, I think is a great place to be buying Nike for long term, in my personal opinion. So we'll be diving a little bit deeper into Nike stock. Remember, it is down 27% year to date. And in the last 5 years, it's down 16%. So there is some buying opportunity going on right now. From its peak, it's down 55%. It was closer to $169 per share at the end of 2021. Now, recently, we actually saw Bill Ackman buy more Nike stock with over $1.4 billion in his portfolio that he's managing. Okay, just in Nike stock, which is around 11% of his total portfolio. A key strategy that Nike is moving forward implementing is moving from wholesale to doubling down on direct to consumer. Okay, so for the longest time, they were selling wholesale to big box stores like Foot Locker, for example, but moving direct to consumer online sales straight from Nike.com or their direct store is going to be a key growth, they think, moving forward. We did see some slowing growth in key locations like China for Nike, which is a bearish thing. And then recently we saw Nike just report 10% decline in quarter over quarter sales just recently in their most recent quarter earnings update. And they also withdrew their 2025 guidance. So those are some bullish and some bearish things going on with Nike right now. We can see that their quarterly net income has been pretty consistent between 1.5 to 1 billion. Their most recent quarter earnings going down. Their revenue also going slightly down, around 10% fall on total revenue. If we look over year, we can see that it's really stagnated at that $5 billion mark for Nike's net income. So we really need to see that up to 6-7 billion in net income to see the growth happening. We also need to see that total revenue keep increasing by double digits. So from 2020 to 2021, we saw a 19% growth in a revenue, but we need to see those double digits keeping 11% growth, 12% growth. We need those double digits revenue growth from Nike. So can that happen? That's something we'll talk about in a future video. And I do believe so, but we'll do a deeper dive in a future video. Debt to asset liability is 62%. It's not ideal, but it's still pretty good. All right, 38 billion in assets, 23 billion in liabilities. I would give them around a B- on their balance sheet. So all that's interesting, but what do analysts have to say about the stock? They see a 16% upside in the next 12 months, which is great because that'll outpace the markets. Their typical 8 to 10% gains per year. Nike should outpace the market in analysts' opinions to $91 per share in the next 12 months. And I think that's honestly possible to get with a swing trade. I think we'll see Nike at $91 per share or $90 per share in the next 3 to 6 months. So that'll be a good little swing trade, and above $100 per share. Now that could take closer to 12 months time. Now moving on to Baba and Chinese based stocks, we saw Michael Burry increasing his holdings in Alibaba, and it's now 25% of his portfolio, $21 million in Baba. We saw Michael Burry also increase his position in JD.com, and he increased his holdings on JD by 100%, and it's now 24% of his portfolio, which is $20 million. Baidu is 15% of his portfolio. So these three Chinese stocks, Michael Burry is continuing to double down on, and it's very interesting to see where smart money is doubling down. Bill Ackman buying more Nike, Michael Burry buying more of these Chinese-based stocks. Now, these three Chinese-based stocks alone, these companies represent the backbone of China's tech-driven economy. These three companies are essential for China's digital growth. Regulation and crackdowns have produced strong headwinds for these stocks. That's why even though they've been showing impressive growth on revenue and net income, the stocks have still been going down, because there's so many headwinds that these stocks are experiencing in the last few years. However, that could be easing up. We're starting to see China's government being a lot more lenient, especially on Chinese-based companies, because they're realizing that these regulations and crackdowns are not going to allow their economy to grow. Geopolitical tensions could also flare up as something that is a risk of holding and owning Chinese-based stocks, especially with Trump as president. We don't know what's going to happen with China. Obviously, he probably will try to keep good relations with China, but you really never know about those geopolitical tensions that could happen, that you definitely have to be at least considering. The valuations of these stocks are very, very good, but there's just a lot of risks. So let's take Alibaba, for example. In the last month, they're down 13%. Year to date, they're only up 13%. And they were as high as $109 per share, skyrocketing as much up as 54% in less than 12 months. So these are also good swing trade opportunities after we see a huge sell-off like we saw in October and November. Now, the consolidation is closer to $75 per share, so that'll be the best entry point. But in the last 5 years, the stock is down 53%. Keep that in mind. It's very important. From their peak, they're down 71%. They were closer to $304 per share. However, if we look at the last 5 years and beyond of their total revenue, we can see that it's just been increasing and increasing from $250 billion to $949 billion. They're almost doing $1 trillion in revenue. And just the last 5 years, they nearly increased their total revenue by 100%. Yet the stock is down around 50 to 70%. Now, this could tell a little bit more of the story. We see their net income very inconsistent, 2022 falling as much as 75% on their net income. However, they've continued to grow from there. From 2022, they're up 124% in 2023, and then continued to grow almost double digits. They grew 7% to $79 billion. But if we look at the quarterly revenue, this is where it gets interesting even more, because the middle one, Q4 2024, we almost saw them actually not even turn a profit, which would be a very, very bullish thing for Alibaba because they haven't done that in years. So something's going on. They need to get it figured out, and it looks like they are starting to figure it out, because in the last 3 quarters alone, we can see that their profits have been skyrocketing from $4.1 billion to $22.5 billion to $42.5 billion in net income. So that's a massive amount of net income to be experiencing from their total revenue. And remember, this number, 42 billion in profits, that's per quarter, not per year. So this is a company that has very impressive fundamentals of the stock. We would like to see a little bit more consistency, especially we don't know what happened in 2022. Well, obviously we do know what happened, but you know, we don't want to see stuff like that when we're owning a risky speculative stock. We want to see the revenue continuing to grow, which we are, but more importantly, when you want to see that net income continuing to grow. If we look at some of these other years before Alibaba started to fall, we can see the extreme growth that they had. Every single year without missing a beat, they actually turned a profit and they raised their guidance and raised their net income every single time, from 2016 to 73.02 billion to 2020, 146 billion, nearly a more than 100% increase on net income in just the span of 4 years. So an impressive company to say the least. Lots of things going on. Very great balance sheet, as we can see, 36% debt to asset ratio and 1.7 trillion in assets. This company gets an A+ on their balance sheet. Fantastic balance sheet. There's no risk of them going out of business anytime soon. It's because they're making so much profit. Even though it's going down a little bit, they're still making 79 billion in profit per year. That's an absurd amount of money, which shows why they have so much assets, cash and cash equivalents. If we look into their balance sheet, we can see that the cash and cash equivalents is 248 billion. Absolutely insane how much money and assets that this company has and how low liabilities they have. So great company. Let's see what the analysts have to say. Now, on average, we have a 46% upside to $126 per share in the next 12 months from analysts. So in analyst eyes, this is a great trade, and it's even better than Nike, currently sitting at $86 per share up to $126 per share. The lowest analyst has it at $105 per share in the next 12 months. So this is a great buying opportunity. If we scroll down, we can see where these analysts are coming from. We see 4- and 5-star analysts all coming in the last 2 weeks. We can see a 5-star analyst from Benchmark Company just assigned a price target of $118. And this was just recently. Success rate of 54%. Not the best, but not the worst. Average return rate of 15%. Another analyst coming in at $146 per share from DBS with a success rate of 71% and an average return rate of 20%. So, you know, most of these analysts have above $100 price target, and these were all just reiterated just, you know, a few weeks ago, to say the least. So there's a strong possibility that we're going to see Baba stock above $100 per share and closer to $120 per share in the next 12 months, which would be around a 46% swing trade. Again, there is risks with the stock. It's not a guarantee, like we went over in the beginning while talking about it, with the geopolitical tensions that can flare up and the crackdowns and everything. But looks like things are starting to ease up. It's also risky to get into Chinese-based stocks, especially when there's a new presidency coming in the next 30 days. We're having a new president. So who knows what's going to happen with that. But fundamentally, analysts love it. I love it. I think that this could easily be a $120 stock, at least a $100 stock in the next 6 to 12 months. I hope you appreciate these videos and it gets the wheels in your head turning on where to invest your money and make a great return in the stock market. This channel is all about making you some extra money and learning something along the way. It's called learning and earning, the two best combination of things you could possibly do. And that's what this video helps you accomplish. So share this video with a friend or another stock market investor if they're interested in Baba stock or Nike stock, long-term investing, risky investing. This video is for them. Thank you guys for making it all the way to the end. And if you want to join my private trading group where you can see exactly what I'm trading and buying and everything in between, that has produced thousands of successful testimonials, click on success number 11. Read through some of these positive testimonials yourself. Click on the Discord, join that link to the #1 stock market family on Discord. in success number 11. It's like the third or fourth slide there. You could join that Discord. Thank you guys for making it to the very end of the video. I'll see you guys in the Discord, the daily stock market, and I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.